Hello guys and welcome back to the channel. So in this video we're going to talk about if Tesla has killed its own moat with the recent announcements, and if the stock is still worth over $200. Should you sell? Should you buy? What should you do at this point? So all I ask, as always, if you like this video, please make sure you hit the like button and make sure you subscribe to the channel. And if you want to speak to me directly, please make sure you check out my Twitter. I recently have crossed 1,000 followers on Twitter, which is crazy because I really started posting a bit more than a month ago, so that's really crazy. So the ticker is Vince is bullish. You find me there. Please make sure that you come and say hi. So recently Ford has announced that they will be changing their own charging ports on the cards and on their own cards, and they will adopt Tesla's starting standard into their cars, which is the North American charging standard, and they're going to do it in a way that all the Ford EVs can use the Tesla superchargers, and they will share the API, meaning that the Tesla owners don't have to download the Ford owners don't have to download the Tesla app. They can go into the Ford app, and the Ford app will tell them where the next closest supercharger is, and the payment is within the app. And some people were very baffled by this decision, and then Mary Barra, the lady who was the first one to start the EV revolution in the US, and she's leading apparently, and now she's leading by copying Ford into being the second one who is adapting the North American charging standard. And the Tesla stock has been soaring lately like crazy, and a lot of people had this question like, should Tesla car owners be happy? What should Tesla stock holders say? Obviously, the Perma Bear, Gordon Johnson, was saying that this was Tesla's only moat, and now they have eroded this moat. And I wanted to take this up with you if this is true or not. So first of all, in the announcement, they said that they are sharing half the superchargers with Ford. They didn't fully disclose how they're going to do it, so I have a few options. So I think that either they do it dynamically, meaning that Tesla will always take the 12,000 least used superchargers at the moment that it would show up in Ford's API, thereby making sure that the Tesla owners are not disadvantaged by this. Or if they don't do it dynamically, then they obviously, because they're so integrated, they know the traffic at each supercharger charging station, so that they are getting them or giving them the least or the less trafficked ones, so that the very highly trafficked supercharging stations will only be still Tesla exclusive. And you know, GM has sold 3 Hummer EVs last quarter, so not sure that they're going to use up all the 40-something thousand Tesla superchargers, and I'm not even sure why that is an issue. But where this is super amazing is Tesla is going to get way more money now to be able to even build way more superchargers. And this is a win-win for Tesla owners. This is a win-win for the EV revolution people. This is really a win for anyone who wants to buy a Ford, GM, or a Tesla EV, because now they don't have to have the range anxiety. So now let's address the point of sales. So is this going to hurt Tesla sales? And I have a very interesting viewpoint on this. So the real moat of Tesla is the innovation. Musk has said it very many times that the real moat is being more innovative and innovating faster than anybody in the industry. And clearly Tesla has this, right? And the point is that Tesla was never going to, I know there's so many YouTube videos who are saying this is the next Tesla killer, or you know, Tesla is going to make all these other companies go bankrupt. But the truth is that the plan was never that they would take over 100% of the market, and it's actually impossible. It's not an iPhone. It's not a car is not a product that you can just, you know, design up and manufacture out of thin air. It's a very complex machine, and I think that the biggest car maker today is probably Toyota, and they probably have a 10% market share on the market. So the plan was never that Tesla would take over the whole market, and I think that it's impossible. So there was always going to be other players. And where I think that this move is extremely genius is that Tesla anyways is selling more than what they're producing. So they are selling every EV that they're making, and their mission is to accelerate the world's transition to EVs. So if they cannot already supply the customers with enough EVs, the customers do need to buy other EVs from others, otherwise they are slowing down the EV motion, right? But there's no way for Tesla to make money on these customers, right? Unless they share the supercharging station and unless they share future things. So even though Tesla only will have a future, 10-15% share of the overall car market, they are still selling to, a much more broader section of the market, which is really, really brilliant. This is when you see how good their business model is. So the next question is, so knowing all this, how much does this move the bottom line? And the truth is that the charging is very little money for a Tesla. I don't think that this significantly moves the valuation or the bottom line in any single way. However, this is a very, very significant thing for Tesla. And why do I think that? I think it's because the other car companies are finding that, okay, Tesla is not a competitor that is trying to kill us. It's actually possible to cooperate with Tesla. They're going to find out that even they are getting a positive reaction from their own customers, because this is the big fear. When you announce basically that we're using Tesla superchargers, you're in a way saying that we're not as good as Tesla, right? So it's a very, very sensitive subject to announce, because you don't know how are your investors going to react to it? How are your customers going to react to it? And all I've seen on social media, on Twitter, the stock price of Ford went up after the announcement. The stock price of GM went up after the announcement. So clearly the investors like this, okay? But I'm hearing from a lot of people that I'm following that, I was thinking about buying a Ford F-150, but I didn't do it because of the charging system, and now I'm going to buy it, right? So even for the customers, it's a positive. So this shows that when the real cash cow, which is FSD, is realized and it actually exists in the physical universe, these companies have already a working cooperation with Tesla. They know that it doesn't cause brand damage, it doesn't cost investor damage, so it's very safe for them just to announce that, yeah, Tesla is making full self-driving cars and we are licensing the technology from them, and that is going to move the bottom line like crazy. So think of this as a Trojan horse that plants the seed that, okay, Tesla is not out there to kill us. Tesla is the good guys, and we can really cooperate with them, and this is super much going to move the stock in the future. But now let's go into the nitty-gritty details of what a Tesla valuation might look like. And I have this table that if you follow the channel for a very long time, this table is not so accurate and it's a very lazy way of doing valuation. I'm going to update this table with a much more detailed valuation. And I want to say one thing before I show you the numbers very quickly. I somehow the viewers don't really watch the videos when I talk about the actual numbers of the valuations, which is really weird. That's like one of the most important things when you watch stock market channels. So I know that you guys for some reason don't like it, so I'm going to keep it very short. But one point that I want to make. So recently I've been listening to a book called 100 Baggers, and it's really messing up my mind about investment. And they talk about this concept that you can have positive catalysts that happen to companies that you just cannot model in your valuation model, right? And they give this example that everybody wishes that they had invested into Amazon in the very early days, but Amazon was a bookstore. So if you do your school valuation that you learn in school how to do DCF, and your DCF is the most accurate DCF on the planet, it's still a freaking bookstore, and you would have never gotten the valuation, no matter which DCF or how you count, you would have never arrived to what Amazon is today, because Amazon had a positive cataclysm, or a positive shock that happened, which is they were iterating and they came upon this thing called AWS. And AWS completely changed all of Amazon's valuation, and there was no way of knowing it. So Tesla has a multiple number of things that we know are going to act like AWS for Amazon. We know that FSD is coming, and it's not a pipe dream. It's not Musk standing on stage saying it's going to happen this year, you can turn on YouTube and see on the, by the way, Musk is saying that it's going to come this year. It's like a sickness that he has, you know, every year, New Year's, he wakes up and he's like, okay, FSD this year. But the point is, you can see it on the videos that it's coming, the rate of improvement. You can, it's happening right in front of you. So the people who are saying that FSD is far in the future or is not coming, they are delusional. And also the people who say that this will need regulatory approval, they are also delusional, because it's a true statement that it needs regulatory approval. But how is it approved now? It's in beta, right? So even if they reach the full self-driving, until they get the full regulatory approval, they will just keep it in beta, and everybody just can still use it the same way. So the point is that the FSD is not really priced into the stock. The licensing FSD to other companies is not really priced into the stock. The Tesla bot is zero priced into the stock. So you're getting these known, it's like almost like buying Amazon back in the day, when you sort of knew that AWS could be a very big thing, and it's coming, and Tesla has 3 of those, right? You can even have 2 of them fail, and you still have an amazing stock. Okay, so I just wanted to say that keep in mind when you look at the valuation that there is a lot of hidden positive catalysts that can happen. So this valuation is based on them only selling cars, and it's not the best valuation model. It was done before they started lowering the price, but I did not change it because, as I said, I believe that they're going to start making a lot of money on FSD, and this is why I didn't change the profit. So I'm just showing you how it is, and then I'm going to tell you what I would do. So I'm very interested in 2025 and in 2030 what the stock would do. You can see that I have the vehicle numbers that they would produce, and that I have them growing by 40% per year. And if they do that growth, they are going to have 200 billion revenue in 2025. And if their operating margin is 20%, that's a 41 billion bottom line and profit. And then if you put a 40p on this 41 bottom line, then you will have a 1.6 trillion market cap. And then if you divide that by the share count, which I count with 3% dilution, then I have a future share price of $467 in 2 short years, which is almost a double from where we are. And I have this reverse discounted model because I like to aim for 30% return per year. So if the stock price will be 467 in 2025, what would I need to buy the stock at to have a 30% return per year? And my price is 276. So if it's below this price, for me, this stock is still a mega buy. And in 2030, I have the stock at $2,000. And to have the 30% per year return, I would have to buy the stock, I'm sorry for this motion, at $182. So I'm going to update this model, so don't rely on me. You should anyways never rely on YouTubers. What I recommend you to do is, if you do your own valuation model and Tesla stock is below that price, I would be adding to that stock, because all the people who were trying to time the market, remember Chicken Genius, he said when Tesla stock was at $110, he said, don't buy, it's going to go to 60. How did that recommendation work out for you? He was also the one who sold Palantir at $10 because I don't know what, he got a weird idea, and just a few weeks later he missed out on 50% stock increase. And the reason, if you're doing technical trading and you don't give an F about what stock you're buying, I can think with this that you just buy and sell in and out of stocks. But the problem is that if you want to invest for the long term and you did your due diligence and you know that Tesla is a fantastic freaking company that you want to own, and it's below your price target, you cannot buy the target because you simply don't know if the stock price is ever going to come back to the price that you want. So currently the stock price is $244. And even though the stock has rallied like crazy, right? Let me see if I can show you the stock price. It has seriously rallied like crazy. Okay, we all know what the chart looks like. My computer doesn't want to cooperate. We all suspect that there needs to be a pullback, right? But the problem is that when Tesla goes on its insane rallies, it can just go up and up and up and up. And if you don't buy when you can, when the stock actually matches your stock price, I cannot guarantee that you will ever see that price again. So you might be making a foolish, stupid, freaking mistake trying to time the market. But if then the stock price go down, be happy because you can buy way lower than your price target. So that would be my advice to you. Tesla stock is my second favorite after Palantir. I love Palantir dearly. Tesla stock is my second favorite. I want to build up a very, very big position in Tesla. And even at this price, I would be buying. So thank you so much for watching. Let me know what you think. Please make sure you subscribe to the channel and hit me up on Twitter. Vince is bullish. See you guys. Ciao, ciao.